Welcome to the Capital Compass. I'm Lindsay Melch. Mullen Group is making major moves in 2025 and not quietly. From a landmark acquisition to a significant debt offering, the Alberta-based logistics heavyweight is doubling down on growth in a volatile market. Today, we are unpacking the headline, making acquisition of the Cole Group of companies, a century-old logistics leader, and diving into the details of Mullen's $400 million private placement debt deal that's fueling its expansion. Joining us to break it all down is Joanna Scott, Senior Corporate Officer, and Carson Urlacher, Senior Financial Officer at Mullen Group. Welcome to both of you. Quite the bundle of news hitting the stands.
Yes.
Thanks for having us, Lindsay.
Yeah, thanks for having us.
Absolutely.
And it has. It's been an exciting 6 months here.
Sure.
Absolutely. Yeah. So, Joanna, I'm going to start with you here. The Mullen Group has certainly been busy over the first half of 2025. I mean, that is clear. So my first question is if you can tell us more about what the company has been up to.
Yeah, and like I said, it's been a great time for Mullen Group and in an uncertain market. And we've had a lot of exciting things happening, two of which stand out to us because they really set us up for the long term and our future. And that is, as you had said, our acquisition of the Cole Group of companies, which we announced the closing of today, and also our private placement notes offering. We priced that and we announced that pricing on May 22nd, 2025.
Well, let's peel that back just a little bit more. And maybe, Joanna, you can continue on here. Tell us about your acquisition of the Cole Group of companies and what Cole Group actually does.
Yeah, and I'll start by saying we are absolutely thrilled to add the Cole Group to our organization and to welcome its employees into our group of companies. But before I get into that, I just want to step back and explain a little bit about why we were able to do the Cole acquisition when we did. And we have to go all the way back to 2022, at a time when a lot of other companies in the industry were growing and buying companies. We actually didn't like the valuations at that time. And so we kind of sat back and we were quiet and we were disciplined and we kind of held our cash for another day. And lo and behold, that day came not that long ago. And we were thrilled to be able to use that money to acquire such a great company. It's a gem, and it really is a generational opportunity to be able to acquire the Cole Group and put it into our group of companies.
Absolutely. Now, what do they do?
Well, they're over 100 years old, and they were founded in the 1920s, and they have a long proven record of success. They are an industry-leading full-spectrum logistics company, and they do customs brokerage as kind of their main line of business. And then they also do some freight forwarding and some customs consulting services. They also operate throughout Canada and the US from 43 locations. And those locations are strategically located at air and seaports and land borders. And they also have over 700 employees that provide industry-leading customs and logistics services to a very diverse group of North American and international customers. And they do that through a suite of proprietary technology software.
Wow. Now, quite a partnership that you all have now. Let's flip to you, Carson. What about the financial metrics behind the acquisition? What insights can you share about that?
Sure, Lindsay. So Cole Group is expected to generate roughly about $300 million of annualized revenue and approximately $20 million of operating income before depreciation and amortization. So that's commonly referred to as EBITDA. So Cole Group operates a very non-asset-based business. So EBITDA is essentially EBIT. Now, what did we pay for it? It was approximately $190 million of cash consideration, which is subject to a working capital adjustment, which is no different than a lot of transactions of this size and nature. So the working capital, will receive $29 million of working capital upon closing of the transaction. And included in the $190 million of consideration is also $10 million of real estate, mainly associated with office space and those sorts of things that we'll end up acquiring as part of the transaction.
Wow, this is fascinating. Joanna, I'm going to go back to you on this one. Can you tell our audience a bit about the strategic rationale behind the acquisition?
Sure. And there were a number of reasons why we really liked the goal acquisition. And, you've probably heard us talk about our precision-based acquisitions. It has to be the right fit, the right price, and have the right synergies. And the Cole Group fit that for a number of reasons, but I'll give you kind of 5 key strategic reasons why we liked it. The first is it really allows us to expand that non-asset-based logistics and our entire service, or our entire mile service offering. And that provides our customers with enhanced choice and flexibility. It also provides for meaningful synergies through cross-selling opportunities with our U.S. 3PL segment, and then also within other divisions of Mullen Group. It also allows us to assist our customers in managing the increasingly complex global trade market. I think we can all agree that tariffs and trade are not getting any easier these days. And then another thing you'll hear us talk about is our free cash. The acquisition of Cole Group will be immediately accretive. They generate free cash and they have minimal capital expenditures. They're really just made up of very skilled professional employees and technology, and we like that business model. And lastly, it is a foundation for our long-term growth. The Cole Group really does that. It establishes a robust platform for us for our future growth in the U.S. and the international logistics segment. And it's something that we really have been focused on lately for the longer term.
So you really just took your time and really did your due diligence, and that is so important to make sure that that partnership, is a success. So great job on that, for sure. Now, Carson, the big question on this, how did the funding come together for the acquisition of Cole Group?
Well, as to Joanna's point earlier, we really didn't use a lot of our bullets when the market was peaked back in 2022 and 2023. So we have initially funded the transaction using our $525 million of bank credit facilities. But our strategy has always been to match long-term assets, including acquisitions, with long-term structured debt. So what we did on May 22nd was we entered into the private debt markets, raising $400 million of 12-year money, and basically structured that debt out over the long term. So over that $400 million, a portion of those proceeds are going to be used to repay that $525 million of bank lines, so we'll be undrawn. We'll also be refinancing some notes that are coming due next year in October of 2026 with that funding. And it's also going to leave us with approximately $125 million of cash on the balance sheet with which we can deploy going forward. So a liquidity position, we're going to have over $600 million of liquidity, including our cash and our undrawn bank line. So we're in a pretty good space going forward.
Great job, guys, for sure. Now, as we close out our time here today, Carson, what additional information can you let us in on with your private placement debt transaction?
Well, I think the private placement can be characterized, we were very well received again with the private debt markets. We had very strong demand. In fact, we were over 7 times oversubscribed on the bids compared to our initial offering. So having structured debt like this really puts us in elite territory compared to our peers. You have to have a balance sheet that's structured with, real estate and consistently generate free cash over the long term in order to play in this market. So it really kind of differentiates ourselves from a lot of our peers. So the notes are actually, getting into more specifics of them, they're combined with both Canadian and U.S. Denominated currency. At approximately about a 6.2 interest rate coming due in 12 years, which is remarkably consistent with 20 years ago when we entered into the debt markets. The interest rates are almost identical as to what we've achieved now. So it's expected to close in early July. So we'll get the funding then. And I'd also say that this round of financing is essentially the same financial terms, financial covenants as to the debt that we raised last summer. So really what we did was we de-risked the risk of not being able to finance next summer. Who knows where the debt markets and the interest rates are going to be next year? So what we wanted to do was de-risk it, and we used the opportunity to refinance next year's notes along with the coal acquisition now to really be able to put our balance sheet into a secure position on behalf of our shareholders and really protect that dividend and our balance sheet going forward.
Well, let's lean into that just a little bit further then, Carson. How satisfying is it to Mullen to be able to execute on its strategy despite all of the uncertainty right now in the market?
Well, that's a very good point. In uncertain times, we're still showing both growth with the coal acquisition. So we're growing our business in a time where everyone else is kind of on the defensive. And really, we put our balance sheet in a position where we can now sit back and deploy capital and not have to worry about financing over the next decade. So really, it's putting us in an enviable position.
It sure is. And I think I just add to Carson to say a huge shout out to the team here at Mullen Group. We've done a fantastic job, and I couldn't be more proud of our team and just very excited about what the future holds for Mullen Group.
Absolutely. And there seems to be a lot on the go, and we hope to have you back for further updates soon. Thank you for joining us.
Thank you.
Thanks, Lindsay.
That's a wrap-up of our conversation with Joanna Scott, Senior Corporate Officer, and Carson Urlacher, Senior Financial Officer of Mullen Group, trading on the TSX under the symbol MTL. As the company pushes forward with its growth strategy through the Coal Group acquisition and a major private placement debt offering, investors will no doubt be watching closely. For more information, visit their website at mullen-group.com. I'm Lindsay Melch with Stockhouse Publishing. Thank you for tuning in.